Hey there and good afternoon traders. This is Trader Tim from eMiniMind.com doing a Monday market analysis video for the 30th of March 2020, and some good stuff to go over here today. I wanted to start with the S&P, and as a lot of folks are looking at the high to low halfway back point in terms of a likely place for the market to roll over. And you know that makes a lot of sense. There's definitely a lot of talk about that level, and with the rally that we've had off of lows, and especially these last 3 days, it's very likely that we'll be able to get there. Part of that stems from we had the gap up at lows. Anytime you have a gap up at lows, that's a strong buying signal. And conversely, anytime you have a gap down at highs, that's a strong selling signal because the move is sort of just beginning to initiate. If you have a situation here where we've got this strong close back on the 13th, and then a little bit of a gap between this cluster of lows from the 11th, 10th, and 9th. If we cross above the high of the 13th, 27.11.33, then we should be able to cross that gap and fill that gap. And then at that point, we're so close that we should be able to get there. We've got a number of unfilled gaps that we've kind of been busting through on this rally as well. And if you, let's see, if the next one, market just closed here and 26.85 and a quarter. So yeah, this is really the next unfilled gap that I have on my list. It's going to be this guy right up here. On this move up, another thing to notice is how each low for the day has been higher than the prior day. So as we start, if we break a prior day's low, that would be the signal to jump in to some shorts to try and carry things on a rollover. I did put on last week, let's see, ADS is the short from the 26th, and it was just the low below the low. Let's see, is that right? Hang on a second. Yes, below the low on the 25th in ADS. Nice bearish candle here, and then a couple days here we've been starting to go down, and then I just got my stop above highs. Next thing on the list, I wanted to talk about the VIX, and we're kind of trading between the 50% long and then the 50% short. So you can see we're kind of ping-ponging between the two, bouncing off of about 55 and then bouncing also off of 68. So once we get a resolve in one direction or another to above 73, or we'll say below 48, really breaking this swing low down here would be significant, and breaking this swing high up here would be significant. And then in conjunction with that, a move in the opposite direction for the S&P, because they work in inverse to each other. As far as what to do when the market gets up here to this 50%, you could look at buying some puts if you're interested in trying to get like a in the S&P here. If you wanted to get like a 220 or 230 something down here, pretty dirt cheap, that would be one option. You could short the micro ES and have your stop above the 61.8, or you could look at the smaller time frames, and as we come up to the 50% on the daily, look to the 15-minute chart for a short to set up, and then come over to the 512 and take a smaller setup on the 512. So like here, just pulling here at the end of the day, you've got a larger retracement like this, and then as we zoom in, we can find a smaller one right at that 50% level or thereabouts. Some things that have been working in this last handful of weeks here since the volatility has been increased. Widening from a 1.5 to a 3-point stop in the big ES contract has been good. I know some folks have switched to the micro, and that's fine. And then also using the negative 23 as your target for the position, and then at the same time getting really aggressive with your stop, going right to trailing each candle as the trade starts to work, as opposed to drawing a full halfway back, letting the trade, bounce. This is a really, pretty small setup here, but instead of letting, let me go back a little bit here, instead of letting the market come, like in this case, instead of letting it come all the way halfway back and letting it come, from like 2604, basically a 10-point pullback, instead of giving that up, I'd rather come in and just trail my stop underneath each candle's low, and then get out up in this region before it makes such a big pullback. And the moves have been large enough where that's a super viable option. And then the other thing is taking setups at 15-minute halfway backs on the 512. Those have been the setups that have been the best. I've taken some resistance trades or support trades, like at the top of the range and the bottom of a range, and those have been okay, but the ones that have been my biggest winners have been right at the 15 halfway back, and then pulling a small micro on the 512. So that's what I'm going to continue to watch here in the next couple of weeks. And then I also just sent an email out regarding the swing trading class that I'm going to be doing next week. And if you want to get more info on that, you can shoot me an email, tim@eminimind.com. Thanks everyone, and have a great week.